Andre Banks with Banks Credit Chat coming to you today, giving you two ways to pay for a home remodel without tapping into your home equity. Now, the reason why I like these two strategies so much is one of the strategies doesn't actually allow you, it's unsecured, and it doesn't allow you to put any additional strain into your home, to your home in itself. And with everyone living in their home, the home has now become more precious than ever before. Home has always been precious, but in the sense that many people are home and people are doing remodeling and making the home more of a castle than it's been before. These two strategies will allow you not to put additional strain on your home equity, and you might be able to utilize it for another time. First one, I'm going to venture that you probably thought about or maybe considered and maybe even heard about. The second one, I'm pretty sure, I'm going to venture here to say that you probably not even thought about or even heard about it. So I'm going to begin with the one that you probably haven't heard about. And I got a couple of notes here just in case I look back at it at that point. The first one is called a Title I loan from the government. And this is for qualified borrowers who can make specific updates on their home. These include buying appliances, making your home more accessible for many, energy sufficient, and it allows you to borrow up to $25,000 in repayment terms, and the repayment terms are between 12 and 20 years. Now, the kicker here is that you have to, anything over 7,500, you will have to utilize your home as a collateral, but it's still a government-based loan. And these particular loans are not really heard about enough, but they're utilized. And not all the lenders are going to offer you the government loans. I'm going to put a link inside the description here that gives you an access to HUD government, see which areas and states and different aspects that allow you to be able to qualify for it, and gives you a little bit more information. But again, this particular strategy allows you to actually do repairs, remodel your home, even make it more energy efficient, as I said before, without tapping into that home equity line of credit, and which, in the day and age where everything is based on credit, this strategy allows you to still obtain a loan to do those improvements without having the extra burden of putting additional debt on the place that you're living in. The second strategy is actually obtaining a personal loan. And a personal loan, what I like about this particular strategy is that with a personal loan, it's just like it sounds like you're taking a personal loan on yourself, and you're utilizing that to purchase or do remodeling, do repairs on the home without self, and it's unsecured. So meaning that it's not put on your house itself. And if you find yourself in a situation, unfortunately you won't, but the case in day and age where if you find yourself in a situation you're having trouble making the payments, it's not attached to your property, and therefore it's less likely to become an issue of you being outside of your home and not making a payment on your home, because then therefore they can try to put areas that they can foreclose on. And that's a little extreme, but in this day and age of, especially the day and age with pandemics, COVID, and so many people in forbearance, this particular strategy doesn't allow you to put any additional strain on the place that you live, and you don't want to be caught outside with the pandemic. Another thing about the personal loan, which is really good, is that the interest rates are typically lower than you will find on a credit card, and they usually will give you a larger sum. Some credit cards only want to give you $2,000 or $3,000. A personal loan may give you up to $8,000 to $10,000, and again, if you qualify and your credit is not that bad, it can be it could be as low as 6 to 8%, which is more than you get for a home equity line of credit. But again, you're not putting that strain onto your home. I think these two strategies you take one to look at, and I'm going to put a link inside the description for the first one of the tier Title I government loan, because again, it's rarely people don't utilize or even know about it. And I'm going to put that link inside the description for HUD, so you can take a look at it to find out if your particular lender doesn't know about it and which areas, all the information you can find about it. So, two strategies to pay for a home remodel without tapping into your equity. If this video has been any value to you, please subscribe, leave some comments. And until my next video, I'm out.